Good evening. Tonight, we want to talk about entries, and we want to talk about entries as it pertains to using structure to help with those entries. Now, we've done a lot of videos about structure and volume, but in some of my classes, I have had some students that have made mistakes about these entries and what they see and what they don't see. So we want to talk about those for the next few minutes. My name is Derek Taylor. I am the founder and CEO of the Collective Trade House. Do me a favor, if you like the information that we give you tonight, like and subscribe. I want you to stay to the end. We won't be on here long, but I want you to be able, at the end of this video, you will be able to have a better understanding about entries and exits as it pertains to structure. So we're going to get into it right now. So one of the things I think people have stress about is, again, I've said this on many videos, but am I getting in right? Am I getting out? Did I stay too long? Am I getting in too early? So to help understand this, I want you to pay attention here. This is a Euro NZD. And I want you to really torque down on this premise. When I see an upper movement like this, the first thing I do is immediately I put a trend line. I put a trend line on it because that trend line helps me to identify the structure, and it also helps me to see the increase in volume as price in this case moves up. The other thing you want to understand is to be able to recognize what may look like, in this case, in this scenario, what may look like exhaustion, meaning that volume is slowing here. And this could be an area for rejection. I also see that the fact that when we have consolidation or price moving closer to the trend line, we also understand that the money or the volume for the upper movement is dissipating. Ladies and gentlemen, all we do here is price action. All we do here 24 hours a day, 7 days a week is price action. I'm not looking for, any particular thing. I'm just looking at the science of price action. So when I have an upward or downward movement and I see that volume is decreasing, which means my momentum for that upper movement in this particular case is slowing. Okay. Even though I have things like the ADX that said it's still trending, that opposite DI here is lower than 10. That's telling me I still have momentum for the upper movement. I'm looking here at the MACD. I see the signals cross that zero line. See, volume has increased. But remember, all these indicators on this chart are all lagging indicators. Matter of fact, most volume isolating indicators are lagging. This is the reason why I like the trend line. It's more of a tool. All these are tools, but this is really a tool because it is based on just me being sure that I place it right, but also being able to see that, hey, you know what? I see that volume's dissipating. Should I start looking for rejection here? So if we're using structure, right? If we're using structure, I drew this line earlier at this area price rejection here, but also on this flat top candle. The trump cards and candles when it comes to structure are flat top candles. I'm only concerned with flat top candles as it pertains to bearish candles. Okay, as it pertains to bearish candles. I'm only concerned with flat bottom candles as it pertains to bullish candles. I'm not concerned about a flat bottom candle in a bearish candle. I'm only concerned about flat bottom candles on bullish candles, meaning candles moving in the upper movement. So these two areas are outlined here, and here. So price is actually stuck in between structure. And you've heard me say this before, volume kicks down doors. Volume breaks down the walls of structure, right? And the less volume I have, the less momentum I have to go through structure. So this is where price here ended up at the close on Friday. So now I have to think, okay, is trading going to continue? Is there going to be more momentum? Is there going to be more money coming into this pair? I don't know. But as you can see here to the right, I have set an alert for the upper movement here, and I've set an alert for the sell. Okay. And I trap price either way price goes. I am not married to a trend. The only trend that I am married to is it pertains to Bitcoin because of all the things that we have associated with crypto in general. Crypto follows Bitcoin, so I am more apt to be a bull when it comes to the movement of crypto. Okay, but other than that, I am I am only a bull when it comes to crypto, and I am not married to a trend in regular Forex pairs. I don't care if it goes up or down. And that's why it's important to strengthen your skills when it comes to price action. Because you don't care whether or not price goes up or goes down. You think about you guys who have corporate 401k accounts. If you have a bad day on the market, your case suffers. But if I'm a trader and we do heavy Forex, we do heavy crypto. But if I'm a trader in Forex, I could care less which way price goes because I have the skill to recognize the trend. And if you really, really torque down on this information, you'll have the skill too. Okay. Now, let me move to another pair. This is AUD-CHF. This is one of these things that my student had an issue with. So she caught this upward movement here, got out, and then for some reason, I don't know why, but she took a buy in this area. Nevertheless, she made a mistake. We corrected it, moving on. But I want to give you an understanding about this. So we have clearly price rejection here. And you can see that we have price rejection here because if I go to the line chart, boom, here's the rejection, sharp rejection there. Okay. So we see this upper movement here. Price comes here, rejects, and now you see price moving away. So remember we said earlier, when you have price coming back the other way, I start to see the money in the downward movement here, right? I see a retest. Buyers are trying to come back. Nope, price continues. See almost another retest here. Nope, price comes back. Volume increases. Look at this big flat top candle here. Price increases, and see how far price is away from the trend line. So I have volume in that downward move. And I'm going to show you some other things about this here in a second. But this is what I want to say. So say you are just like her, you get into this trade, you see the rejection here, you get out, and then you get this candle and you decide you want to get in an upper movement. And I have this area highlighted here for a reason. So if you see this candle and you're going like, ooh, I may want to get in here for an upper movement. This is not your signal or your candle to tell you to get in here. Why? Because my highest rejection point for this upper movement is here. My entry for an upper movement, and this is a conservative philosophy, is not for a couple of things. Number one, I want to see a break of structure here for the upper movement, but I am not getting into this trade until price breaks here at the top of this box. This is why we have this alert. Okay. So now the money is clearly in the downward movement. Look at all this space. So the market opens tomorrow being Sunday, and you want to take advantage of maybe there's volume here, maybe there's over-the-counter trading over the weekend, and there's a huge, let's just say, I have to take a look at it, but I don't know. But let's just say there is just based on this space here. Well, if I'm looking at the MACD, the signal has not broke that zero line, okay? So I'm not ready to take this for a sell yet because there's huge areas of structure here. Obviously, this demand box, but what about price rejection? So if we go here to the left, I have price rejection here, and then I've had price rejection at the bottom of this box. This is where our signal is for entry here. But Derek, why can't I just take, if price just drops out of here? Well, things. Number one, something could happen and this demand box would disappear. That's another class, but it can. This week one supply could also disappear. You know what won't disappear? Structure on past price. There's look here at this line. I'll put this line here. Look at this. Here's rejection at this period, here, and all this consolidation in these points here. So we could say that this line is a significant level of structure. Matter of fact, I could go ahead and put a horizontal line here. So I'm definitely not getting into trade until price clears here. But then I have another area. And then if we go to the line chart, I can see that price rejected here. So I'm not getting in before here. So, and again, my philosophy is pretty conservative. I am not getting in this trade for a sell until it clears here the bottom of this demand box or this area of reference of price rejection here. So understanding structure is very, 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 very important. Now, look, I've said this many times. If you've watched this channel, it's going to be very, very hard because you don't need these indicators. You could use price action on a naked chart. But if you cannot identify support, resistance, and structure and be able to locate price, it's very difficult to be a successful trader. Now, again, you've heard my objections about AI, but I will say this about AI. There are some good programs out there that have an AI program that can give you analysis. Now, I like that, but I don't like AI bots trading for me. I don't like that. That's another conversation. But as far as consulting, AI consulting and long-term outlooks and stuff like that, I think that is a very good tool if you can find something smart and something useful. But I'm an analog guy. Maybe I'm showing my age. I don't know. I've been trading now 9 years, going on 10. And I've been able to understand and be able to identify support, resistance, and structure. So at the end of the day, if you could do it analog, right? If you could do it analog and be able to see the movement of price and understand increases and decreases in volume, you're going to be a heck of a trader. You're going to be a heck of a trader. So don't get hung up, and especially if you're new. You're not going to see all of this right away. You got to put some work in. And we're here at the Collective Trade House. We're going to be here all the time. We drop content every week, maybe every couple of days. It just depends on, our work schedule and stuff. But my goal is to try to get something out 3 or 4 times a week so we can help you in your progression as a trader, right? I just want everybody to get a hold of what the power of trading and compounding money is and how powerful that is. And I sincerely, really want you to get it. And it'll change your life. I promise you it will. Keep coming back here. Again, if you like this content tonight, subscribe and give me a like. It really helps out the channel. And we'll be here again tomorrow with something new. Y'all have a good night.